Hey everybody, this is Jose here. We are about to get started in just a few seconds. This is a sound check. Let's have a quick sound check as we start the session so I know you hear me well and all is good when it comes to technology and we are ready to get started. So please go ahead and type a quick message on the chat box as we always do. That is my indication that you hear me well and that way I know we are ready to begin. Please do that when you have a moment. Thank you so much. 30 seconds to go, everybody. I'll put myself here, the bottom right side of the screen, so I can also be ready from here and say hello from my little corner here. Just doing some final adjustments here on my end. Yeah, all is good to get started. Wonderful. Thank you for those confirmations, everyone. 3 seconds to go. We are basically live. Here we go. Time to get started. Here's the disclaimer being highlighted on the screen on the upper left side of the corner. Please read it carefully. This is important information. I'm counting on you to read it completely. Okay. This is options with options. This is July 28, 2021. And of course, the goal is to jump into those options markets, identify the opportunities, put together the trades based on a series of rules and processes and methods that we use in order to always have the risk under control, to add more odds in our favor as much as we can. Of course, then what comes into place, which is critical, is the fact that we need to also manage our human emotions as human traders to execute those trades, with no distortions and, with a professional approach to trading. Okay. So the agenda, as always, we're going to take a look at what's happening in the market. We're going to review trades that we have. We're going to talk about trade management, if anything needs to be done. And from there, we'll move into identifying new opportunities. Going back to the chat boxes to say hello to all of you guys. Siderman, good to see you. Lilan, pleasure to see you here with us. Joanne, morning from most beautiful USA. That sounds lovely. Ready to go from Kansas. Very nice. So I guess that you are not alone, Lilan. I am guessing that you are in the trading room with the guys. Wonderful to see and to hear. Maka, how are you? Everyone, again, also in the public streams, a pleasure to see you all, everybody. So let's begin with our market analysis. First things first, I am looking at on the left the daily time frame of the S&P 500 ETF in this case, and as we can see, we are in a blue climate. It's a blue and thick dot, meaning it's confirmed. Based on statistics, when a climate of this sort gets into place, statistics suggest that it's going to last up to 9 candles. That would be a normal thing to happen based on stats. So far, we are 5 candles into the climate, and therefore, what would be expected is for the climate to continue its propagation for a few more days, again, based on those stats. And also the fact that we have some UFOs here that are showing that if that climate was to, if that market was to try to go down, probably either that UFO or the next one will probably help for that market to be pushed back up, and therefore the climate to continue its propagation, like statistics suggest. So all of this is what we have at the moment. How are you, Mario? Good to see you. Very nice. What else do we have? Well, we can see that since some time ago, the implied volatility for calls and puts has been extremely similar. To be honest, exactly the same today, 12.33 for calls and puts. In this sense, it's difficult for us to understand if there is a bias coming from the professionals, if you wish, because who trades options heavily, but typically is more the professionals than the amateurs, isn't it? And therefore, we would be able to guess or see or sense what their bias is. So from that measurement, we don't see a big difference. It's quite tight. It's kind of understandable. When a market is making all-time high or about to make all-time high, many people are thinking very positively it will. Many people are very fearful now that it will not. And you basically got more or less the same amount of calls and puts to be bought overall. Because if you recall from prior sessions, what I am charting here on the bottom part is the 3-day average of the real-time continuous implied volatility for calls and puts. In other words, what we see here is an average. Okay, so during the last 3 days, calls and puts are trading more or less at the same price. If I was to look at what's happening today right now, well, to be honest, there is a better way to look at it that is in a bottom graph on the chart. I would prefer to load my option volume map and get to understand a bit better what's happening. And so far, we can see in multiple expiration dates, 1.8 calls more than puts are traded, 2.6 times more calls than puts are traded, 2.4 times more calls than puts are traded, and equal amount of calls and puts when we go a bit further out. In any case, you can see the volume for the calls is surpassing the average of the last 5 days in basically all those expiration dates, even in the one that shows one-to-one. And it's not the case with the puts. You can see here we are surpassing the volume for the puts. Here, kind of, but here we are not. Okay, and here is also kind of. So it seems that so far, from behind the scenes, I mean, the perfect time to look at these metrics is at the end of the day when the market closes. So you can now understand overall what was the ending battle at the end of the day. But overall, you can see that the bias would be to the upside, which is kind of confirming what the climate would suggest, as well as the UFOs that we saw on the chart. So this is what we have from a technical point of view on our charts when it comes to what is likely to happen to price movement overall. If we look at the VIX, loading the VIX here, so we can see how the VIX is dropping a bit. Okay, it's down by 4.65% today. So the VIX is pointing at 18, which is kind of like more or less confirming what I just said. When it comes to the technicals, the one thing that is not confirming, and that's why I said more or less, is the fact that both the red and the green UFOs are so far away from price that basically we cannot really count on them to basically dictate anything for us at this moment. And therefore, from that angle, it's kind of like flipping a coin. It may go higher, it may go lower, but definitely from the S&P chart and by looking at the options data and so on, there is a clear indication that at least for now, unless some crazy news comes out in the market in 2 minutes time, at least for now, this is what is more likely going to happen than not. Okay, so I'm moving now to TradeStation. And the reason why I'm moving now to TradeStation is because I have here the trades that we have being executed in our accounts right now. Hey Wayne, good to see you, my friend. Very, very good to see you here with us. And and by the way, as I said in prior weeks, I will be using a collection of different trading tools, different platforms, and so on in the sessions. Even though, as you will see, we'll have more and more tools for top, and it's going to make our life easier. But in any case, I want to support all of you, no matter the platforms that you use, right? So I'll be moving back and forth between platforms. And at this moment in time, we have MPC, which is a trade that we took some time ago on that particular date right here. We expected the stock to stay in the purple area, and that didn't work according to plan. The stock went clearly below, and therefore we converted the iron condor into an arrow butterfly, and now we got the price of that stock trading in the blue zone. And therefore, because it's back to the blue zone after being outside or below the purple area, so now we should be back in business. We should be back in profits, and therefore it may be the time for us to close this trade, and collect whatever profit is there. So let's take a look. I'm loading OptionStation Pro. Also, I want to bring Think or Swim. You can see here MPC in the account is showing a PNL, a positive PNL of $17. The reality is that the PNL is better than that because we already closed profits when we rolled this trade from an iron condor to an iron condor with lower calls to then finally converting it into an iron butterfly as a defensive measure. And we collected profit with those two actions. Plus now, if we close it now, we're going to collect another $17. So indeed, it seems that this trade is ending up as a profitable one, MPC, and it's going to be likely the time for us to close the trade, even though I would like to comment a bit more on that. Okay, so right now, if you close the trade now, okay, the net PNL that would be collected per contract is $78. That would be the net PNL, which is great because when we started the Iron Butterfly, let me rephrase that, the Iron Condor, if I am not mistaken, we were shooting to make $75 per contract, and we were wrong on the trade, and thanks to our defensive measures. It's not going to be like that every time, but indeed, it's efficient to get in damage control mode when a trade goes against you, and now we have an opportunity to go ahead and close the trade for what the original profit would have been if everything had worked according to plan. So nice one in this case, and hopefully a good experience for you guys, especially the newer members with us, that you never worked with Aaron condors in a way where you converted an Aaron condor into an Aaron butterfly, and maybe it was something new to you, something maybe even weird. And next thing you know, now you see it working, and now probably you don't feel it's too weird anymore, but actually it's quite smart. Okay, even though there is no guarantee. Okay, in trading, it's always about finding that sweet spot balance between probability, risk, and reward, and act with discipline and good management of the emotions. So again, closing this trade now with have us collect $17 if I close it now, but if you count on all the prior profits accumulated, so it's $79. That is the net PNL. So should we close the trade now or not? Okay, I'm sure this is some of you are thinking about, are we going to leave money on the table if we close the trade now? Let me go back to TradeStation. Again, when is the highest profit going to be collected for this trade? Well, if I go back to the risk profile graph, the highest profit for this trade will be collected if on the expiration date, the stock is trading exactly at 55. And if that's the case, you're going to make $200 instead of 79. Okay, so is there more money to be made? Yes. But what's the other thing that could happen? Well, while the stock is currently trading at 54.5, you may have the stock go higher, and end up trading, let's say at 56.5, and then the maximum profit that you're going to make is, $60 or $50, which is less than what we're making now. And same thing if it goes lower, or even if it goes even beyond that. Okay, if it goes below this crossover between the blue line and the zero line right there. Okay, if it goes below, let's say 53, or if it goes above, let's say 57, so then you actually start losing money, right? Where right now we do have an opportunity to close the trade for about $80 of profit. Okay, so my choice in this case would be to close it now, and that's it. Remember, it's not about getting greedy. It's not about being a perfectionist, because in this case, if I can say it like this, if you guys allow me to be a bit harsh on with my own words to myself, it doesn't make sense for me to be perfectionist at all, because I was wrong on this trade. So being perfectionist when you've been wrong because price was supposed to stay in a range and it didn't, I think it's a funny approach to trading, right? So the idea is you were wrong. You have now an opportunity to save the trade and end up with a decent profit. Just close it, move on, go for another one. That would be my approach. Certainly accept and understand that every one of us have a different trading plan, a different mindset. And I could understand some of you may look at the UFOs and may say, okay, but wait a minute, Jose, wait a minute. What about, there is a green UFO there. What about I just wait to see if it bounces from the UFO, reaches 55, and then I close it, and then maybe I make another $15. Could you do that? Yes, of course. But understand that you also have the risk that then it goes lower and then it goes below the UFO, and then what are you going to do? Because now you're counting on the next UFO, and if the next UFO doesn't work because the climate is changing, and by the way, the climate is not confirmed right now, right? So what could happen that, next thing you know now is below the blue zone, and what was a nice profit now is a loss, and just because it was a bit too much, overdoing it, right? So I would, to me, I'm just closing the trade. Okay, if you guys are with me on that, then do the same. If you have other reasons to stay in the trade and other methods, it's fine. But again, let's not forget that this trade was not a trade that behaved according to plan, and we do have an opportunity to get out for a full profit. Okay, so I would say let's take it. Okay, so I'm gonna take it, and feel free to comment as well if you have additional comments or questions. Okay, maybe you're like, okay, Jose, what about this? What about I move to a lower time frame with the UFO? What about I do that? Again, different approaches could be applied as long as you have a rule for that. Okay, and you're not being led by let's try to make a bit more, right? Remember, we don't deserve this profit. Okay, we were wrong on the trade, so we end up with this profit. Okay, we deserve it because we had a smart way on how to defend ourselves, but we don't deserve it from the point of view of being right on the trade at the beginning. Okay, so I'm just gonna go ahead and close it. Okay, so I'm gonna select those 4 options, right click, create an order to buy back the Aaron Condor. Okay, here it says 133, so naturally it's 148. So I'm just again, in your case, you guys shave the spread properly. in order to save a little bit of time for the session, I'm just going to go with a market order. Please never do that. It's painful to my eyes when I do it because you never want to do that with options. But I want to do it so I get the fill immediately in the simulated account so you guys can see the price I got, and that may also serve as a reference, okay? Because the simulated account will give you the midpoint, but also the midpoint, it's a nice one in the sense that it uses the intelligence of Thinkorswim in this case, doing price prediction, okay? So 129 is what I got filled at. This could be a good reference for you guys. Maybe you want to try to get filled at, maybe start at 125 and see what happens. Maybe you get it, and if not, you can always raise the price just a bit more until you get filled if you choose to close the trade, okay? So that's it. I'm out of the trade, and so far all is working well. We're gonna get rid of the symbol here from the to be reviewed column, and the next one I need to review before getting to trading mode is SKT, which I have very little to say about this trade, which is the fact that that was the day of our entry, and we were expecting the market to move up and reach 20. That was our target. And that never happened. Actually, it just kept going lower. Gave us a little bit of hope when it was coming back here, straight up here. But then next thing you know, 3 UFOs on a row forming to the downside. So yeah, not working well. Good news, we sold the 21 call against the 20 call and so on. And therefore, this trade is an extremely low risk trade. Basically, this trade has a $57 risk, if I'm not mistaken, because, the original trade got 67 and then we managed to sell the 21 call for 10, so the total risk is 67 minus 10 is $57. So in that sense, again, we are playing defensive, we are playing well, but and by the way, we have time until August 20. So we still have almost a month to go, and certainly if the market starts making all-time high, next thing you know, you may have an incredible push on the stock, and you end up with a profit, which is the beauty of playing defensive, to give the trade a second chance without adding risk. Okay, it's the opposite. We are reducing risk and giving the trade another chance, okay, which is kind of like the opposite of classical techniques like averaging down, right? So when you average down, you give the trade a second chance by adding risk. In this case, we give the trade a second chance by reducing risk, okay? So as the trade is proven to not work well, you reduce the risk and you give it a second chance instead of adding more risk to a trade that is proven to not to work well, okay? So, in my mind, smart actions to be taken. But again, as long as we do it based on rules, not based on, human emotions and things like that, okay? Good, so I'm looking at the chat box. Everybody is so silent. I am hoping that means it's all good. I'm hoping that it means that you guys are watching closely, making notes. But in any case, I need a bit of your feedback. So guys, please comment on the chat box, even if it's just to say, all great, all good. Please type a quick OK on the chat box so I know all is good. And if you have any question about anything, options, the platforms, the charts, the UFOs, whatever, this is a good time to ask too, because sometimes we do receive emails from you guys where you are asking questions that are very difficult to answer in an email. And these live sessions also can be used for you to phrase those questions so we can help you better, okay? Good. So it seems that everybody is doing well. You close it, Maka, at 127. Better than me. I got 129. You got 127. Good one. Good reference as well, Maka, and great teamwork. Siderman, you got 125. Very nice as well. Again, out of curiosity, again, because you guys know I love to compare brokers, and what I always said out of experience is that most of the times TradeStation will give you the best feels compared to other brokers, but it's not always the case. So Siderman, if you don't mind to share what was your broker when you got 125, and also Maka, I believe you're using TOS and Siderman TradeStation, but it would be great to know as well. Okay, so that way we can also compare the efficiency of those different brokers. Cool. Great teamwork again. So now let's get into trade planning mode. So for 2 weeks now, or like a week and a half if you wish, I have been utilizing Top. Okay, Top is our tradictive options planner. For the ones of you new to the sessions that you never seen it before, so this is what Top means. It means tradictive options planner. And Top has a million of functions and functionalities, especially when it comes to trading options that are very, very powerful. I need to show you all of it, how it works. We're going to use many of those tools in our sessions. They're going to help us to save time and so on. But again, we are in that final development stage of top and about to release it to the public. So we are kind of like the pioneers. You guys get to see things that officially no one has seen, even though we are streaming this in public, like in places like YouTube. So actually, many people can see it, but no one knows it exists yet. That's my point. So again, the way I'm bringing in some of the training and some of the tools that we're going to be utilizing to take options trading to the next level from many angles, from efficiency, from time usage, from probabilities, from all of those places. It's that I am adding one tool at a time, if you wish, and then I'm spending a little bit of time to explain from a very broad point of view certain key concepts, and then I narrow down into, okay, so now you know all of this about the tool. This is how we're going to use it. So again, last week, for example, I spent a lot of time talking about the grouping of the stocks, things like that. So I'll spend less time with that today and move into other things too. So again, if you are new to the sessions and you see tools and things and you don't know where this is coming from, my recommendation, if you don't mind, would be that you go back in time and you watch the recordings from the prior sessions so you get up to speed. Because I don't mind to repeat, but at the same time, there are so many tools in top that I don't want our option sessions to become a trading platform type of training, even though it's there are certain things we cannot separate. But I want to take it easy when it comes to explaining the technology. I want to use the technology to do the trades. That's what I really want to do. Okay, so if you don't mind, please go back and review recordings if you are new to top and you haven't seen it before. Okay. Let me see. Siderman, let Lily run and go out at 240 for $1,000 profit. This is wonderful to hear, Siderman. Wonderful to hear. Good job with that management. Maca, TOS live. Mario Oakley, Jose, just a stupid question. If we keep open the arm butterfly up to the expression, how is it going to work? Okay, so we talked about this. I believe it was when was that? Maybe 3 weeks ago or something like that. So if you go back to the risk profile of an iron butterfly, okay. And by the way, Mario, this is not a stupid question, and there is no such a thing as a stupid question. Okay, so you need to understand what you got in your hands when you trade, and that's what you're doing with that question. So please, I would like to encourage everybody to ask questions of that sort. Okay, so please do that. Siderman, so you are trying to close it with TradeStation, but you haven't got it closed yet. Okay, got you. So that's a significant statement there. Thanks for that, Siderman. So going back to the butterfly. So what do we have? Well, when you look at the risk profile of the butterfly, it looks like a triangle shape, isn't it? Why is it? Well, because if you think about it, so you have an option above, which in this case is the 60 call that you're long. Right? You have then two options in the middle, which is the 55 call and the 55 put that you're short, and then you have a put below, which is the 50. Right? So that's your iron butterfly. So what will happen to your butterfly if you let it expire? Okay. Well, if price is either above or below, what's going to happen is that automatically one strike will get auto exercised, and the other strike will get assigned. So if you are below the 50, so the 55 put will get assigned and the 50 put will get auto exercised. So you are out of the trade for a loss, which is the predefined loss that we have on the screen. What if the stock goes above? Then if the stock goes above, the one that will get assigned is the 55 call and the 60 call will get auto exercised. So you will automatically be out of the trade for the predefined loss as well. Okay. So again, if you're above or below 60 or 50, then it's automatic and you take a loss, but you don't need to worry about anything. You don't need to do anything. What's the tricky part, which is what's likely to happen? What's likely to happen is if price stays between 55 and 60 or price stays between 55 and 50. That's the tricky part. Because if price stays exactly at 55.00, okay, if price stays exactly at 55.00, then none of the calls or puts will get assigned and none of the calls or puts will get auto-exercised. So everything expires worthless for the maximum profit. Okay, so you don't get a loss, you get the maximum profit and you don't need to do anything. It's beautiful. But again, how rare that's going to be that you end up exactly at 55.00. That's almost impossible, right? So normally, if you're going to be in profit, you're going to be either on the upper area or in the bottom area. And if you are in the bottom area, the 55 put will get assigned, but not the 50 put. The 50 put will not get auto exercised. So on Saturday, the day after expiration, well, again, depending if it's a monthly expiration or a weekly, you get my point. After the market closes, you will get assigned long shares of stock. So throughout the weekend, and now you're on Monday. So what's happening in your account? Now you got a stock position, and if the stock gaps down, you got added risk. What if you end up in the upper part? If you end up in the upper part, the 55 call is the one that will be assigned. So now, when the market closes on Friday, you are going to get assigned short shares of stock, 100 shares of stock short per contract. And then on Monday, when the market opens, you are exposed to a gap up with 100 shares short, which could add more risk. So in other words, while I'm very happy to leave an iron condor alone all the way to expiration, if price is in the purple area, right, and the whole thing expire worthless, I would never be even a penny. Exactly, Joe people. Even if it's 001, yeah, you're gonna get automatically assigned and you get the shares. So with an iron butterfly, the beauty, you saw the beauty, right? So next thing you know, we converted a losing trade into a profitable trade. It's beautiful. What's the issue though? Well, the issue is that you cannot leave it alone all the way to expiration, or you should not, because then you are adding stock risk. Okay. So what can you do? Close it before expiration. Option number one. What can you do? If you see you're gonna get assigned short, buy long shares. So you are long shares and then you are assigned short shares and then they neutralize and you're out. Or vice versa if you're gonna be assigned long. What else can you do? You can buy a deep in the money option on Friday, 2 minutes before the market closes, just to offset the risk of a gap up against you. So you can do multiple things to defend yourself, but it's basically getting quite complicated. Okay, especially if you think about why you have an iron butterfly in the first place, which was a defensive technique against a trade that didn't work well. So your question, Mario, is very good. What would happen if you leave the iron butterfly out there? And I believe we talked about another iron butterfly that we had recently in a session too. But so that's what would happen. Okay. Again, I cannot help it. I need to mention again the same comment I made before. Is like, why would you leave it open all the way, right? So, let's be reasonable with our managements. I'm not saying that's your intention to leave it open all the way to expiration, Mario, but let's be reasonable, especially in this case. On top of that, you have stock assignment risk. And in this case, I'm calling it a risk because all the options expire. So the only thing you would have is stock. It's not like when we do double calendars, where you may be assigned stock, but you have a call or a put to defend the stock you got. In this case, you would only have stock because everything else would have expired. So you are actually naked stock, okay? Short or long, naked stock. Not a good idea, okay? Cool, very good question. So anyway, we're back to top, okay? And now it's time to trade, okay? So what are we gonna do, okay? So crash course, speed of the light. Just want to uncheck everything I got here. Everything is unchecked, everything is unchecked, everything is unchecked, everything is unchecked. Here we go. So let me float this window. Let me maximize it. Okay, this is the matrix. I'm just gonna make it big, 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 so we can understand everything that we're gonna do here. And if I go back to how this would come by default, so basically you have all the stock symbols in the stock universe for US stocks. You can also pick specific sectors, or you can also pick stocks and ETFs or ETFs only. So again, you can filter by different things. But basically, what I'm getting on the screen now is all the stocks in the US. The one thing I have done, my pleasure, Mario, very good question. The only one filtering here I got is the price of the stock being 34 or more, with a little bit of a liquidity there, 300,000 shares, which you could argue this number you can lower it a little bit. But again, if the underlying is not liquid, there's no way the options are gonna be. And if the underlying is liquid, even if the option chain doesn't show much liquidity, you will have liquidity because market makers will get shares against the options contract they get you. So then you actually can trade. So again, that's a minimum parameter that I'm going to leave there. That could you drop it to 200,000? Yes, of course. But again, just like could you drop 34 to 25? Yes, of course you can. But this is going to be my starting point if that's okay. So if I scan, I got way too many opportunities. I will not know where to start. Plus, because I'm scanning for nothing, I don't have an edge. Okay, so what do I want to do? Well, the first thing I want to do is to get directional. We talked about it. The market is in an up climate. We may go ahead and find good opportunities to get into stock trades. And we want to take advantage of a potential breakout and new all-time high on the S&P, which would potentially push the stocks higher at a very fast pace, and we want to profit from that if that was to be the case. So how can we find those opportunities ahead of time? Well, we need to filter based on certain ingredients that are going to help those trades to be better. For example, filtering based on the group in which that stock belongs. Okay, so if I select group rotation and I select I want the long-term trend of that stock, okay, not only the trend but actually the strength as well, okay, of that trend, I want it to be strong up. Okay, I could select strong up or strong down. So if I was to filter this, so that's going to give me a much shorter list, which is very likely going to be way too long still, but now that list is way shorter. Okay, so now, I'm getting into something that at least have some edge built in. What else can I do? Well, I can also look for the stocks to also have that same trending or strength condition. So the stock is a strong guy that belongs to a strong industry. In other words, the stock should do well by itself, but if it was to weaken, hopefully the industry is going to kind of like motivate the stock to keep going, right? So that's what I'm pursuing, especially if you recall that I've said millions of times, stocks are fragile by themselves, okay? They are fantastic to trade, but they are fragile. So if I scan now with all those two parameters together, so now my list is getting shorter, even though it's still huge, okay? Okay. That's a good problem to have, isn't it? We like to start with long lists to then narrow down to the highest quality opportunities we find, okay? What else? When it comes to options filters, I'm not going to use it because that filter, to be honest, represents filtering options contracts. I'm not filtering options contracts. I'm filtering stock symbols at this moment. So that's why it's actually gray out. There's nothing I could select. If I had selected, to filter stock option symbols, then I can say, okay, I only want options with, X amount of days to expiration, whatever. But that's not what I'm filtering. I'm filtering for stocks, okay? So that's what I'm doing now. Scan list. I'm going to use my scan list. Okay, some of you have sent an email and asked me for the scan list. I'm happy to send it to any of you guys. This is what we call the penny increment options list, which is actually created and maintained by Thinkorswim. I just created a text file out of it, which I could import in top. And why is that list great? Well, because all the options in here trade in penny increments. So when it comes to shaving your prices, right? So you have a bid and ask spread and you want to try to get in the middle and get a good price. So these particular stocks provide penny increment options, which make a difference, okay? So I'm gonna scan and now the list becomes shorter, okay? Even though it's still quite long, if I go from up to down, so we have, maybe I would say maybe 40 stocks or 45 out of the whole market. So it's great that we are narrowing down, but it's still too long, okay? What else? Here we got, some additional tools, which, I'll skip for now. Then we got earnings, okay? Which I'm going to select earnings at least 5 days later, right? So I'm going to exclude any stock that is reporting earnings in the next 5 days, okay? So I'm going to exclude that, meaning that any company that is about to report earnings, I will not trade it because, less than 5 days may not give me time to reach my target, okay? So I want to give myself a little bit of time, okay? Cybermans, how to get it from TOS? Yeah, so it's a bit tricky, to be honest, even though it's doable. I've done it. So you get into Market Watch, okay? And here in the list, okay, if you look for the P, you have the penny increment options. So when you click on that, the whole list will show here. And then, you have to be a bit subtle with your mouse, but you can just copy and paste the whole thing on a spreadsheet, for example, and then, that's it. That's your list, okay? So again, I didn't come up with that list, okay? This is something that TOS does for years and years, okay? This is really not new, okay? It's for many, many years now. Okay, so I've been using that list like forever, okay? And it's just a very simple way to, let's say, find some quality out there in the options. So what else? So now I got all these lists, okay? Now the list is down to, let's say, 30 stocks, okay? Could you now go one stock at a time manually? Yes, of course you could, okay? And if you're a stock trader, probably that's very, very good for you to now go ahead and check. But I would like. Yes, yes, for sure, Cyberman. No doubt about that. I'm happy to email. Okay, just send me an email and I will email it back. Okay. Yeah. Wonderful. So now let's keep going. What else can we do? Well, let's not stop at a stock level, okay? Because we are options traders here, right? So let's add options filtering criteria from the advanced options scan. Now, what type of criteria? Well, first of all, to be directional when trading options, the normal way to do it is to buy options. So you want them to be cheap, right? You want them to have a low level of implied volatility. You want them to be underpriced. So certainly I could, look at different ways on how to look at options to be underpriced. But also, even before I get there, I'm going to select that I want my options to have a top positive CIV spread. That's what I'm going to start selecting. And notice now how my list reduces greatly. Why? Because the options that have a top IV spread are options that are going to show the blue line above the gray line on that volatility chart. I mean, they may not, because I am charting the 3-day average, okay? Where what I'm scanning is what's happening today, right? So it may or it may not, but, let's say it's likely to, okay? So there is at least built in behind the scenes. From the options prices, we can sense there is more buying than calls than buying than puts, and there is more selling than puts than selling than calls, okay? And all of this is bullish. So we want to add that indication to our filter to add an edge for us. Together with the stock and its strength, we have the sector and the liquidity and what's happening behind the scenes with the options. So that's a very good beginning. But that doesn't mean the options are cheap. Okay, so what else? Well, I'm going to add another option scan, which is going to be looking for options, okay, to be below the 20 percentile. But at the same time, the only one I care about is the put. Why? Because I selected positive CIV spread, meaning the call I want it to be above the put. So I'm not going to care about the call because I want the call to be above the put. So I'm going to look at the put to be low, and that should do it for me to give me a very short list of stocks that meet that condition. Today, I got 4. Okay, there are times where you will get none. And when you got none, I'll give you other choices. So you will always have. Okay, so there will not be a time where it's like, why can I trade now? Okay, so you will always be able to find a stock to trade with options to pick up direction. And why is that so important? Because there are 2 ways, or there are 2 reasons for you to need a directional trade. First reason is you got nothing in your account and you need to get started and you want to get in and trade directionally. That's the first reason. So you need a directional trade and you are looking for it. But what's the other reason? The other reason is that you already got multiple directional trades in your account and you want to add a trade against what you got. Why? In case the market moves against you. So at least, some trade makes money. Because if the overall S&P was to move in the opposite direction because of some, let's say, macroeconomic reason or whatever, so then your portfolio would suffer. So it's healthy to have a little bit of a hedge with having certain positions against your main positions, okay? So sometimes you need a trade and you need it now, especially when, let's say some of your stocks you got reach your target and you're going to close them. So now you may need to add, let's say you had a hedge and the hedge reaches your target and you close the hedge. Now you are naked without a hedge. So you want to add another hedge. So yeah, so long story short, we'll talk about how to always be able to have your trade, okay? For now, I'm going to go ahead and look at the ones we got. So I'm going to click Abbott. And as I click Abbott and I go back to top, so here is Abbott. Okay, and the one thing that we're going to do now is to start looking at auto climate and everything else that we need to check to be able to see if we validate the trade or not. But there's something new I need to explain today. So I'm going to take a sip of water if you don't mind, and I need to explain something new that I never discussed in the sessions, and it doesn't have to do anything with options, it has to do with the charts. Okay, so 1 second. Thank you for that. So what is the one thing I want to explain? Well, to be honest, it's a really, really simple thing, but it is indeed very powerful, okay? So what is it? Well, what I want to explain has to do with the timeframes. So far in the sessions, okay, we have been using daily timeframes, and I look at the climate, and then 55-minute timeframes, and I look at the UFOs and the performance, and if the performance is not good enough, in this case 44, so then I move and I look at pre and post market data, and hopefully I got a value which is 50 or more, and if that's the case, I approve the trade, and if it's not the case, I don't. This is certainly a good technique, okay? Absolutely nothing wrong with it, okay? This makes a lot of sense, especially if you want to keep your risk very small. You want to be in relatively active trades that are kind of based on daily climates. So certainly that makes a lot of sense. It's a very good thing, and you guys don't change it, okay? That works very well. But there is an issue. What's the issue? And I could not fix it until now with top, okay? Well, if you think about, how many of you are attending our futures sessions as well, out of curiosity, apart from options? How many of you are attending or have attended in the past our future sessions? Please comment on the chat box if that's the case, right? And if you haven't, you can take a look in our YouTube channel, etc. In the private room, you have the drop-down menu with all the past sessions, so you can take a look. But basically, in those future sessions, we get very fine and very precise at the use of timeframes, isn't it? We use tick timeframes, volume timeframes. We use all sorts of things that go beyond time. And why is that? Well, because we are trying to be as precise with the risk management and increase as much as we can the probability metric for our UFOs. So that's indeed powerful. But what's the issue with stocks? Why I never did that with stocks? Well, because every stock got a different level of liquidity that changes through time, that changes even more when earnings are approaching. And, if I was to use, it's already complicated, if you wish. Just for the ones of you that never saw it, let me show you something that will open your eyes. 1 second, if you don't mind. Here we go. So this is a picture that shows you the time frames that we use on the future sessions. Okay, so for example, if you were to trade the S&P future and your base is a 15-minute time frame for intraday trading, so with the S&P futures, you would end up using the 2584 share bar combined with the 1597 tick bars, and then optionally the 610 and the 377. And that's fine because you put it on TradeStation and that's it. But what if you also trade the 10-year note? Well, funnily enough, you are almost lucky because at least one time frame is the same, even though the other ones are different. Okay, but what if you trade crude oil? Well, now all time frames are different. Now, what if you trade the Euro futures? All time frames are different. What if instead of the 15 you trade the 60? Now all time frames are different again. So it's kind of something that is already a bit confusing, even though it's worth it because it's powerful and that's why we do it. But it's a bit confusing, let's face it. And that's only with futures where you may trade, 5, 10, 15 contracts the most. But imagine with stocks where you got 9,000 stocks. If we had to come up with a table like that with 9,000 stocks, plus through time, liquidity for stocks changes, right? Depending on where you are in the cycle, if you are close to earnings or not, but it's just not doable. That's it, right? So now you have noticed, probably you have, that if I chart, for example, the S&P futures, okay, on a 55-minute time frame, just any random time frame, okay, so it gets you 55%. But if you chart the SPY, which is kind of like the same, okay, instead of 55%, it gives you, and by the way, I have slow internet today, okay, which is the reason why it's taking a little bit of time to load my data here. I'm having an issue with my internet here for whatever reason. So just give it a second and this will show. Sorry for that. But anyway, my point is, it will, okay, this is really taking a bit too long now. But anyway, my point is, it will go ahead. Those are Fibonacci numbers. Yeah, Joe, you're right. It will go ahead and the S&P stats will always be below the future stats or the Forex stats. Okay, any market. Okay, so again, I'm having a problem with the internet, as I said. Okay, you guys, sorry for that. So any oh, you know what? Or maybe I can alleviate this by lowering the. No, I have it. Okay, yeah. So I was going to reduce the amount of candles just to alleviate the problem because my internet is slow. But anyway, so with the S&P futures, sorry for the long thing, the S&P futures will always give you better stats compared to any stock or ETF. as well as even spot forex, even Bitcoin, even cryptocurrencies. Those markets trade 24 hours a day, and therefore you have much more precision to understand where are the unfilled orders. The stock market closes and doesn't open until next day, all the way so many hours later. The stock market is closed for longer than what the amount of time is open. So many of the orders that are placed during the session, then they get canceled, right? And then what this translates into what? It translates into lower stats, okay? So it's always the case, okay? And unless you have this amazing institutional interest, and then you have 50 plus, but most of the times you got 40 something with stocks, and we cannot change it, right? So now we're gonna fix this, my friends. This is the good news. We're gonna increase the probability of our UFOs for stock trading, even though there are markets that only trade 6.5 hours a day. How are we gonna do that? We're gonna do that thanks to the use of multiple day charts, not multiple minute charts or weeklies, which is the normal thing. With TradeStation or all platforms, you can get into a daily chart, and the next step is a weekly chart. And if you want to get into a lower than a daily time frame, you could. But you cannot go into a 2-day chart like the one I have now, or a 3-day chart like the one I have now, or a 4-day chart like the one I have now. That you cannot do, okay? But we can with top. And why did we make an effort to do this? Well, because it creates so much more relevance to the unfilled orders, and you can see that reflected in the probabilities. Okay, and now almost every single stock that we're gonna chart will give us probabilities that are 50% or greater in order to do our directional trades more precisely. So you're gonna see me soon, actually starting from today. That soon, you're going to see me often look at climates starting from the 4-day climate, and then look at UFOs using either the 3-day or the 2-day. Why? Because that's going to give us more odds, and also a greater probability of finding UFOs lining up with our EMA. Okay, and also longer lasting trades, which the way we're going to construct the trades with the new tools I'm about to show you in future sessions, our trades are going to be more efficient from a gamma point of view. So longer lasting trades is going to make the trades to perform even better. So I'm adding a lot of information here. Hopefully I'm not confusing you, but again, this is going to be super, super powerful for the quality of our setups. So long story short, I'm coming back to the matrix. Okay, let me make it a bit smaller. Okay, so here's the matrix. I'm going to start with the first one on the list, BSX. And when I load BSX, I got 56.7%. Why? It's a 2-day chart, right? So what if I look at a daily time frame? I got 51. It's pretty good, okay. It's pretty good as well. It's not always the case with stocks, but it's better with a 2-day time frame or even a 3-day time frame, okay? And therefore, it's going to help us to find higher quality trades, okay? So let's begin the analysis with BSX, okay? Where we can see we have a confirmed climate, 1 out of 8, okay? So good time for us to get started in the trade, but we can also see that 42 and 42.67, we have actually a little bit more of the put kicking in than the call. So I'm happy to still look into the trade a bit deeper. I'm not rejecting it yet because I'm going to look at the options volume map to see what's going on. And to be honest, we can see, I'm going to discard those values, okay? Because in the front week, you can see that stock is not the most liquid in the world with only 4 puts and only 31 calls. So I'm going to ignore that. But when you look at other expiration dates, for example, here, you can see the volume for calls is much more than the volume for puts. So there is a component, okay? There is a component somewhere in the options map, which of course, if I load the S&P, you have so much data because it's very liquid, or Apple or Facebook. Some stocks will give you options volume maps that are a bit poorer, but still we can see that behind the scenes, okay, there is a lot of interest with the calls. And by the way, look at the monthly expiration date, okay, in the next one, with 33 times more calls than puts. Okay, so someone very large is really, really trading calls here, very, very heavily, as you can see. Okay, so in other words, from behind the scenes, we can see that there is something going on that stock that is indeed a good a good potential opportunities for us to keep planning. Okay. Now, what else are we gonna do? Okay, when we find trades of this sort, well, option number one is to apply our process the way we always do it, which is the best way to do it. We look at the EMA, which is currently trading at 43.39. 43.39 is more or less here, and we look at the fact that we may or we may not have a UFO lining up, and we do. Okay, and therefore now we just need to wait for the price of the stock to come to the UFO, and if that's the case, we take the trade expecting it to continue. Okay, and then the question would be, so where is our target going to be? Okay, so where is our target going to be? We're also going to start using tools that are a bit more advanced, to set targets. And we're going to basically set targets based on the climate instead of just setting targets based on the UFO and that's it, which certainly makes sense. But remember, in an up climate, sell on-field orders tend to be canceled. In a down climate, buy on-field orders tend to be canceled. So the UFOs act as a good target-taking area, but there are many times where you either don't get to the UFO you thought you would, and there are many other times where it surpasses the UFO because the climate is still very powerful. So therefore, we're going to have a more advanced way to set targets that is going to be based on the climate. Okay. So what we're going to do is that we're going to use other tools, like a tool that would automatically plot key pivots on your chart. Okay, that look like those little purple areas. And what we'll do is that we'll pick the prior pivot, and we're going to use this speed bump tool to click on it. And the moment you click on it, it's going to represent where the target should be for this trade. Now, notice what we can see here. We are already reaching what a valid target would be. In other words, while the climate is still candle number one, okay, the size of the move that we just had here is so significant, meaning that we are reaching target already, that this climate is likely not to be sustainable, even though statistics suggest 1 out of 8. The climate is not likely going to be sustainable because the way price has behaved in the last few candles, it's very, very different than what statistics would suggest. And again, this is, by the way, something that we'll measure with these values here on the left, which I will explain at another time. So basically what I'm saying is that while we got many things that are good for the trade to work well, it's not an ideal trade to be taken because that climate is likely going to change. So we will want to see a red dot, get another blue dot, and then go for it. But this is something that obviously will not happen right now. Okay, we're gonna have to wait at least 4 days to see if that's the case or not, because I'm looking at the 4-day climate. Okay, guys, how is it going out there? I'm adding lots of new information today. How is it going out there? You guys are following? Please let me know if all is good. I know with the video broadcast there is always a little bit of video lag, so I may get your responses just in a few seconds. But please talk to me, guys, so I know if you are with me, even if it's a quick confirmation that all is good. In the meantime, I'll move to Twitter, okay, which is the next one in the list. Oh, sorry, I just clicked on the wrong place. And when I move to Twitter, we can see here that we got a climate which is 9 out of 5. So, based on stats, this climate is not likely going to continue. So in this case, we're just going to pass. Okay. Joanne lost to the king. Yep, I get it. We're getting more and more advanced, and then we practice, and then it becomes muscle memory. So what I'm saying, to be honest, is not complicated, and the technology will do the thing for you. But I understand that, every session I add more. So some of you may love it. Some of you may hate me. Anyway, by the way, we're going to have another tab here on the matrix where we're going to have the auto climate here. So we're going to be able to filter for auto climate too. And therefore, that symbol we will not have shown. Okay, so again, all the tools that we are putting in place, that's why we have not released stop yet, are to save more and more time. Okay. So looking at the next one, which is Netflix. So what do we have? Well, Netflix is actually changing climate. Okay, so also something that is not valid. something that we have not showed on the list. What else? We got Snap. So let's take a look at Snap. Okay, yeah, my internet is slow again, so just 1 second, guys. Is loading data. So let's give it 1 second. Sorry for that. One of the things I love about top is how fast it is, but right now it's not, and again, it's because of my internet connection. I was actually very concerned for the session to run well today. Come on. Okay, I'll read your questions in the meantime. Mario, all clear, taking notes. Maka, all great. Still here for Leland. Wayne is with Leland, meaning still there. Joanne, very good. Sidermine, I see that is very different information from what we have been using. Not really. The fundamentals are exactly the same. Okay, that's it. So finally, it loaded all of this. Again, sorry for that, for the delay I'm having today with the data feed. Okay. Not really, Siderman. Okay, you will see. Just be patient with me. I don't know you're super patient with me, but just be patient with me a few more sessions, and you will see how all comes together. So what do we have with Snap? To be honest, with Snap, while the climate is just starting, to be honest, if I do the same thing I did before, and I look for what a target could be, so you can see we are surpassing what a target could be, and yeah. So same comment. So back to the matrix, we got Texas Instruments. So let's see what's going on with Texas Instrument. And in this case, that stock is now moving down. Okay. So what else can we do when we have cases like that? Because remember, I told you we're gonna have cases that are tradable every time. So next thing we're gonna be able to do is option number 2 is look for cheap options in a different way. The looking for options that are below the 20 percentile, it's probably the best way to look for cheap options. But let's face it, it's very rare to find options that meet that criteria. It's quite extreme. So we're going to look for another criteria that is less extreme at times. To be honest, depending on the speed of movement of the stock, sometimes the 20 percentile is less extreme, and sometimes second method, which is looking for CIV mean minus historic volatility to be below a 2 standard deviation, sometimes that is less extreme and sometimes that is more extreme. So they are both extreme in a different way. So what I'm going to do is scan for this one and see if we got something. And we got the same BSX, but we also have AMD that was not before. So in this case, the options for AMD are more expensive. They are not below the 20 percentile, but the speed movement of the stock justifies the fact that they are a bit more expensive. Okay, and in that sense, it makes sense to look into the trade and put a trade in place. Well, it doesn't, because the auto climate is 10 out of 8. Okay, so again, probably next week when we do the session, I will have a filter for auto climate, so these trades will not have showed. Okay, but this week, we are getting into the new process that we are adding, the improved process that we have when we trade options, and it's actually a good thing that we have many no's on the screen. So I show you what to do if you get no's all the time, which is what we just got. We got no's all the time. We went through the process of looking for the puts to be less than 20. We went through the process of looking for CIV mean minus historic volatility to be below 2 standard deviations. We also got no. So what's the next choice? Well, the next choice will be not to care for the implied volatility. And now I get a longer list. And you're going to be like, what? Yes, because I cannot change the fact that options are not that cheap. So if they are not that cheap, I cannot make it up, right? Or use stocks where the group is against the stock or things like that, right? So I cannot make it up. So what we're going to do is that we are not going to care about how cheap options are. And then what we're going to build is that we're going to build directional butterflies, which is a strategy that we have never covered in the sessions. So instead of doing bull call spreads or diagonal spreads, we're going to do directional butterflies where we're going to be able to neutralize the exposure of changes to volatility, which is the risk that you have if you buy a pricey option. So we're going to be able to reduce that by doing an option strategy, which is a bit more complex. Okay. So, but in any case, oh my God, we only got 2 minutes left. So, okay. So we won't be able to do it today. We'll do it tomorrow. But Now when you scan, now you have a longer list. Okay, what I will not take off is the top positive CIV spread. Okay, because that's giving you an edge, directionally speaking. Okay, so we have new symbols like Akamai. So let's take a look at Akamai. So look at that. So Akamai. So you have the climate 2 out of 7. The blue line is above the gray line. And the average value here is 116.99. So 116.99 is right there, and we have no UFO. Okay, now we have no UFO on the 2-day time frame. We can indeed look at the 3-day time frame. We don't have a UFO. We can look at the daily in case we got good probability. We have good probability, but we don't have a UFO. And we're going to use at the 55, which is the classical technique we used to use. And when doing so, we have a UFO, which aligns well with 117.0, okay, which is that UFO between 118 to 116. Okay, so my friends, we do have a trade with Akamai to be planned, but this trade is a trade that needs to be executed as a directional iron butterfly, not as a bull call spread, because it's not the cheapest option available in the US market. Okay, and therefore you may have a little bit of a disadvantage when it comes to implied volatility. In any case, we're gonna simulate that, because the problem of using a directional butterfly is that this is a trade that will use 3 options instead of 2. Okay, a spread typically uses 2. A directional butterfly will use 3 options. So we will actually look to see if we could actually get similar results with bull call spreads by tweaking the strikes. But again, we'll need to do that in future sessions and show you how, because we're going to have tools where the trades will be planned for us. Okay, it's not like we're going to have to come to the option chain and just look at all the strikes and look at the vegas and the gammas and do the whole thing manually. We're going to do everything automated with like a strategy tool, similar to what I showed you the other day. I think I showed you the other day, right? A tool where you basically input the target. Okay, let's say the target is 130, and then it's gonna build the trades for you here below automatically, and then you will know which one to use. Okay, so we'll talk about this in future sessions. Okay, but again, I want to take to the next level everything we're doing, including the use of the charts. Now that we have charting tools that allow us to do 2-day charts, 3-day charts, 4-day charts, which is something that we didn't have before. Okay, and it's time to go. But before we go, just as a heads up, so I open your mind too. Now, how will we trade this particular opportunity? Well, we will need to wait for the stock to come to the UFO, take the trade now, and expect it to move higher, right? So that would be the normal way on how to take care of this, correct? Well, we will add another method on how to be able to do that, okay? Remember, if you need a trade for now, and you need it now, because you need it now, the example I gave you before was hedging purposes, you cannot wait for a retracement, especially if price is far, because that retracement may not happen. So if you need the hedge now and you need it now, we need to find a way to enter quickly that still makes sense, even though there is nothing like the UFOs. That's going to be the perfect way to enter. This is going to be how you have the greater amount of odds. But if you need a trade now because you need it now because it's a hedge, then you need it now. So I need to show you other ways on how you could enter that are a bit more dynamic with much less waiting time, so you can get in now. Okay, and the way we're going to do it, just to give you a visual, we're going to drop all the way to an 8-minute time frame, very tiny time frame, and we're not going to use the UFOs on the 8-minute time frame because, of course, a UFO on an 8-minute time frame will not be capable, even though probability is great. They will not be capable of turning the market, and continue a 4-day climate. Okay, that would be too much to ask for a 8-minute UFO. So what we're going to do is basically, in this case, we will ignore the UFOs, which is something strange for me to say, isn't it? And what we're going to do is that we're going to use those pivots, the same pivots I got on the chart on the left. We're going to use them on the chart on the right, and we're going to have 2 rules. Okay. So one based on pivots and one based on Elliott wave turning points, which I am adding now. Okay, so take a look. We just got an indication. Okay, the orange indication means that's an Elliott wave LU wave turning point that just took place 8 minutes ago in the prior candle. So if that is what we have, the action to be taken is the moment the current candle surpasses the high of the prior candle, take the trade. Okay, so the high of the prior candle is 119.57. The current value is 119.51. So you just need for this to move 7 cents higher and you take the trade, knowing that you are catching a turning point where if the wave coming propagates, that will be a significant move on the chart that will be seen all the way to a 4-day time frame. So now, is that guaranteed? No, of course not. But if you have to enter now, this is a very valid indication for you to take a trade, at least with something in your hands that gives you some odds. What else? What if you don't have an Elliott wave turning point and you still need to take the trade? So then, unfortunately, we're going to have a little bit more waiting time, but it's still not going to be that much waiting time. So then you're going to look for the nearer pivot point, either above or below, depending if you need to go long or short. And what we're going to do is very simple. It's kind of like just pretend that, this is like a ceiling. So we're going to wait for price to surpass that ceiling. And the moment it surpasses the ceiling, we're going to take the trade. So it's kind of like a breakout trade on a low time frame, which is kind of like a confirmation of that something bigger may happen on a larger time frame, knowing that on a larger time frame, you have the climate on your favor, you have the options telling you something's going on, and on top of that, you also have the grouping of the stocks helping for the trade to move. So all of this basically is going to give you excuses to get into a trade quickly with very little waiting time. Okay? And Joe, people, I get your point with front running. It is not my favorite way to get into a trade. The UFOs are going to be more efficient by far. But what if you need to take the trade? Okay? What if you got 3 shorts and you need a long and you need it today? Because if not, you are too exposed, right? So if you need it, you don't want to enter blindly, like cross your fingers, go for it, and let's see what happens. At least you want to add a little bit of odds in your favor, and this is what we're going to do. Again, in a perfect world, you have a proper retracement and so on. But what if you don't get that retracement, right? So, or what if that implies too much waiting time and you need the hedge now? So again, those are going to be the little tweaks that we're going to add to our timings to enter into trade when you have to. Okay, when you have to. Which is, again, a defensive type of approach instead of like a conservative planning type of trading, which is what I prefer to do. But, there are more reasons to enter into a trade than just entering a trade, isn't it? Anyway, Siderman, I see that is very different information from what I've been using. We're taking it to the next level. Joe People, is top a standalone platform or a replacement for OptionStation Pro? It's a standalone platform, so you can use it. The one I'm using now is connected to TradeStation. I don't know if I showed you this before. To be honest, I don't remember. But I'm going to bring another top to the screen. Just 1 second here. So here is top. That's another top. And that one got nothing in it. You can add charts. You can add whatever you want. But this particular second top, and again, my internet connection is slow. Sorry for that. So if I zoom in, you can see that this top is a top version for, okay, so sorry for that, guys, okay? Again, as you know, I'm having problems with my internet connection and it's creating all those little issues on the screen. But basically, this is Tradictive Options Planner for QC, which QC is a market data provider, is not a broker. And therefore, this stands independent of a broker. You can see the tabs you have here and with position. If I show you the other version of top I was using, you also have here account, ticket. So here, you can place orders through TradeStation. We will connect top to more brokers as well, one at a time. But you could certainly use it independent of brokers. So you can use top as your analysis tool and then trade with TOS or any other broker. Okay, so everybody will have their own solutions and we'll add more one step at a time. Okay. Siderman, all style climate. Yes, on a daily time frame, yes. On a daily time frame, yes. Okay, but we are going to be looking at time frames that are more powerful because before we could not. Okay. Great platform. it will make sure users saving a lot of time and them enjoying professionally through trades. Yes, it will make a big difference, guys. Okay, I am telling you it will. But again, I also want to make sure everybody understands. You guys in the session today, also the ones of you watching this recording that recorded, that the world is big. On top is one platform. There are more platforms out there, and some other platforms are very cool as well. So in the sessions, my goal is to support you. The one thing that will always be around what we do is the UFOs, because this is our bread and butter. This is our essence. But for sure, if I can add odds to our trades, I'm going to do it. I'm not going to stop there, right? But we're going to be using all sort of platforms in the sessions. So we will support you all, no matter if you end up a top user or not. Maybe you like it, maybe you don't like it. That's quite personal in the end. Maybe you've been trading options for many years and you have your rules and your methods, and you don't need top. So then it's fine as well, right? So as a company, we are committed to you guys to keep evolving like the markets do. And technology, it's one of the key ways on how the markets are evolving. So for sure we will too. But everybody have their own trading plan, and again, we are committed to support you all. Okay, so don't feel obliged to anything, guys, even though for sure changes will come to the sessions with more and better tools, but I will still continue utilizing the tools we always used. Okay, very nice. So everyone, will call it a day. I am ending with 10 minutes of delay. I hope you don't mind. It's always a very joyful moment for me to join you during the session, guys. So thank you for joining me. Thank you for you guys as well out there in the public streams. I hope you guys are enjoying the sessions. Send your questions, send your emails. I'll see you tomorrow. Let's keep going, my friends. Take care. See you soon. Bye-bye, everyone.